Nvidia just lost $100 billion in market value, down 14% in November alone, trading at $178 when it was $212 just weeks ago. But here's what makes zero sense. While you're watching the stock fall, over 40 Wall Street analysts just raised their price targets to $240 to $260. That's 30 to 35% upside from here, so either retail investors are right to panic, or Wall Street knows something the headlines aren't telling you. And I'm about to show you exactly what that is. In the next 3 minutes, you'll understand why this drop might be the setup for Nvidia's next explosive move. We'll explore what's really driving the sell-off, and the one metric that has every institutional investor quietly loading up right now. Let's break it down. So here's what's happening. Nvidia pulled back 14% in November, sitting 16% below its 52-week high. The financial media is having a field day with headlines about AI bubble fears and profit-taking. But zoom out for 1 second, Nvidia is still up over 30% year to date. This isn't a crash, it's a breather after one of the most explosive rallies in stock market history. The latest trading session showed an intraday range between $172 and $184 with massive volume. You know what that tells institutional traders? Extreme interest, not fear, but opportunity. Therefore, the real question becomes, if the stock is still crushing it year to date, why is everyone selling? Here's where it gets wild. Nvidia's most recent quarterly earnings didn't just beat expectations, they shattered them. We're talking record sales driven by AI data center chips that are selling faster than they can manufacture them. Management raised revenue guidance for the current quarter to $65 billion. Analysts were expecting $62.1 billion. That's not a beat, that's dominance. But that's not even the most interesting part. The company stated their forecasts assume almost zero revenue from China data centers due to US export restrictions. Every dollar of that $65 billion is coming from everywhere else. And if those policies ever change, pure upside that's not even priced in yet. So you've got record earnings, raised guidance, and hidden upside. So why did the stock drop 14%? Because markets don't move on fundamentals alone, they move on fear. Here's the part that changes everything. While retail investors are panic selling into this dip, over 40 Wall Street analysts are rating Nvidia as a strong buy. Their 12-month price targets average between $240 and $260. From today's price of $178, that's 30 to 35% upside. Think about that for a second. The smart money isn't running away, they're leaning in. Why? Because they understand something most people don't. This isn't about one quarter, it's about the next decade. Every major tech company on Earth is racing to build AI infrastructure. And Nvidia makes the shovels for the gold rush. They have a backlog that would make any CFO jealous. Microsoft needs them, Google needs them, Meta needs them, Amazon needs them. This isn't optional tech, it's critical infrastructure. Now, some skeptics will tell you we're in an AI bubble. And maybe they're right. If you want more breakdowns like this where I cut through the noise and show you what the smart money is really doing, hit that subscribe button.